Hi and welcome back to Cheeky Crypto. Today, guys, we're going to be jumping down into the world of Bitcoin, taking a look at what has been going on most recently, what we think is likely to happen next, and all that wonderful stuff. As I get into this video, if you find it useful and informative, smash that like button. I do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. And if you haven't yet joined us in Discord, guys, check it out. Linked in the description below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there. Right, let's jump right down into this. We've got a lot to cover here when it comes to Bitcoin. We're going to take a look at some on-chain metrics. We'll go into some of that, take a look at what's been going on in the last 24 hours or so with the on-chain stuff. We'll be jumping down into some Elliott Wave theory here. We'll be taking a look at the macros and the daily and the weekly and whether or not the golden cross and death cross actually has any kind of impact on the price and all that kind of stuff. We'll talk a little bit about how this is no longer actually valid on the Wyckoff pattern, and then of course jump into some smart money concepts at the end just to give you a bit of confluence on what is going on overall. So let's start things off with, I think actually a good place to start is going to be the on-chain metrics. It'll start here, then we'll jump into the price action. So here we have basically our data that shows us whether Bitcoin is flowing onto exchanges, off from exchanges, and all that kind of wonderful stuff. Top right-hand corner, we have the top-level macro view for 2023. This is basically taking a look at all inflows onto exchanges from the 1st of January 2023 through to yesterday. Okay, we're taking the inflow, outflows, and then the difference between the two. So 1.3183 million goes onto exchanges and 1.3198 million comes off the exchanges, meaning the difference, so the accumulation that has occurred in 2023 from exchanges is only 1.55 thousand. This basically tells us that only 1,550 BTC has come away from exchanges. Everything else is still there. It's pretty much neutral, right? Not bullish, not bearish. We haven't seen a huge accumulation occurring here. And if the accumulation has occurred, it hasn't left the exchanges, which for the most part is incredibly foolish. And a lot of people should probably learn from past mistakes and, look after their own cryptocurrencies. We heard it from 𝗕𝗘𝗪𝗓𝗔𝗠𝗠𝗪𝗓 recently, not your keys, not your crypto, in symbolizing an attack on cryptocurrency exchanges. So if you're on an exchange, do think about that, do your own research, come to your own conclusions and whatnot. But essentially, I think it's high risk. Linked in the description below, you'll find a link to Ledger. Ledger is a hardware wallet, which basically allows you to be self-custodying your own cryptocurrency assets. For full transparency, we are affiliated with Ledger. It's in we earn a kickback if you go ahead and buy one from their website. But essentially, I do think it is a wise idea. Whether we were affiliated with them or not, I would still be pushing Ledger. Personally, I like Ledger, but there are many other brands out there as well. So do your own research and find one that suits and works for you. The only piece of advice I would say when it comes to hardware wallets and cold storage devices, make sure you buy it directly from the manufacturer, not from a third party, so you don't become a victim to a fake device. Okay, so knowing that we haven't really seen a lot of accumulation in 2023, in fact, very neutral, we can take a look at the line graph here. You can see the balance of Bitcoin on exchanges has just been going sideways pretty much from the lows of 18th of December 2022, a little bit up, a little bit down, and then just kind of going sideways. We can also see on the net difference change on 30-day average bars. Each one of these bars is a 30-day average of the difference between inflows and outflows. And we can see that during FTX, the saga of exchanges, people not really trusting them, a lot of withdrawals were happening. But since December, a lot of the Bitcoin's been flowing back to the exchanges, and it's been very, very neutral in terms of accumulation. Not a lot of demand really soaking up that supply. Now, I'm not going to talk about the hodl waves today, but it's pretty much business as usual there. If we take a look at the inflows and the outflows, it's important that you do not just focus on one of these metrics, but you look at both of them and very specifically look at the difference between both of them. You actually understand whether or not you're seeing a significant increase in demand or whether or not actually the supply is outpacing the demand, the definition of a bear market. Right now, we can see a significant amount yesterday was flowing onto the exchanges. 44.5 thousand went onto exchanges with 38.6 thousand coming off the exchanges. The day before that, it was 37,000 going on, and only 32 coming off. The day before that, we saw a minor change, but 28 to 26 in favor of going onto exchanges. We see a little bit of fluctuation, and basically, for the most part, these lines have just been dancing around each other. But I am alarmed when we saw price action, which was increasing. We saw the price of Bitcoin moving up, yet we see a very significant inflow data, symbolizing that a lot of people are moving their crypto from cold storage to exchanges, putting it onto the exchanges. For what purpose? How are they selling? Are they about to sell? Have they already sold? Are exchanges accumulating? Because as we get into our actual data, we can see that Bitcoin Dust, the wallets that have over 0.01 BTC, has taken a bit of a dive. Here we were 11,588,000, and now we are 11,574,000 wallets, okay? On our retail side, we can see the krill over 0.1 Bitcoin, shrimps over 1 Bitcoin, and dolphins over 10 Bitcoin, all of which are decreasing. We see the large institutional whale wallets. This is sharks over 100 Bitcoin, whales over 1,000 Bitcoin, and kraken over 10,000 Bitcoin. What do we see? We also see wallets decreasing here, wallets decreasing over this side, and wallets decreasing that way. This basically tells us that all wallet counts are decreasing, which means that essentially Bitcoin's flowed onto exchanges from all various different kind of demographics, everything from the smallest retail investor all the way up to the largest institutional investor, all have been loading up exchanges. Question: why? Okay, so when we know that on chain we are seeing a lot of flows, inflows to exchanges, we know that all wallets are decreasing in their accounts of wallets that hold these amounts of Bitcoin are on the decrease, then that tells me that we might be on the cusp of a big move to the downside. That's going to be a lot of potential selling pressure that could drag the price of Bitcoin down. Okay, let's jump into some price action of BTC. Now here we can see that we hit our fifth wave target following on from yesterday's video. We can see that we hit this high target. This was originally between 25,075 and 25,353. We can see that we wicked up just above the 25,211 dash line here. Midway through there, we've marked our fifth wave as complete. Now, coming down, the obvious, and I say it's the obvious, is we just focus in on this little move just here. Okay, I'm just going to pull a dash line right here. So you can see we had kind of almost a double top. I mean, it's within tolerance of calling it a double top, I guess. This particular candle that I'm hovering on right now, this is 23,909. And you can see that we had 23,914. So you can argue that it's within tolerance of a double top, but it's not meeting the minimum requirement of what would be A, B, and C structure. I mean, we could argue that it is, but it hasn't met, exactly the same price target. So my expectation is we still have that potential move up a little bit more before we go down. Now, as I said on the stream this morning, my estimate on this is going to be right here at around 24,107 approximately. Remember that number. I'm just going to leave it there. And the reason that this is an important number is I'm going to also draw a fib from this low up to that level right there. See if I can get this exact. I probably can't, but I will try. Let's see, get that. There we go, 27.47. Okay, we're within 20 cents. That'll do for me. I'm going to draw that in there. Right, so this move to the downside has the potential to come down towards this low, which we'll just draw a little box on. It'll help us understand where that's likely to go. And then I'm going to remove the fib in a moment. Okay, so this move to the downside at the moment symbolizes a potential five-wave structure. 1 here, 2 here, 3 down here, this being our fourth wave movement, and then a fifth wave that would take us down into this low. Now, to also do some checks on this, we want to check to see whether or not we're retracing 38.2%, and yeah, we would basically be tracing 38.2% by hitting that target of around $24,100. Okay, so we know that that would be kind of in and around that area. So knowing that allows us to then think about this potential target for a fifth wave move down, which puts us at 22,879 through to the higher range just here at about $23,168. Let's go ahead and just clear out the fibs so we can kind of see that clearly. Now, because it's a five-wave structure, and if you're following the rules of Elliott wave theory correctly, if you start with 5 waves, you end in 5 waves, which means if this is a reversal and we complete a 5-wave structure down here, then the expectation is that we go 3 up, and then we must go down 5 more. Okay, 1, 2, 3, 4, and 5. Okay, those are the rules. And there's a couple of different structures that start with 5 waves. There is the basic one that I've drawn here. This is known as a zigzag. We just find some space, right? A zigzag is basically just A, B, and C. Okay, and it constitutes a 3 waves up, and then another 5 waves down. Okay, we end up with a kind of 5-wave structure like this. I've really badly butchered that up. Let me just move that across there. Okay, so we end up with a 5-wave move down, a 3-wave move upwards, which I'm going to use a WXY for this, so WXY. Okay, so we end up with 5, 3, 5. That's the minimum expectation. If you start over here with 5 waves down, that's kind of what you look for. You look for this minimum expectation. Now, the worst case scenario is that you actually go down in 5 waves, and it looks like this, right? And each of these are starting with 5 waves up here, 1, 2, 3, 4, and 5. We have that WXY scenario just here, 1, 2, and 3, just going up, right, in the 3-wave function. And then we come down in a 1, 2, 3, 4, and 5. Now, the difference is, and you'd end in 5 over here as well, right? Start with 5, end in 5. And I might as well finish it off with WXY just in there. Okay, so the difference between these two is specifically the length of this 5-wave structure. This one here would be 1.618 times the wave 1, and this one here would usually typically be between 1 and 1.236 times the A wave, right? So those are the differences. So you understand that whether you do a 5-3-5-3-5 impulsive trend, this one, okay, that's the definition of an Elliott wave theory trend, or just a short-term corrective move that follows a 5-3-5, okay? So those are the two possible scenarios that could unfold if we complete 5 waves down here. There are a couple of alternatives where maybe this is not the beginning, but it looks like a pretty good beginning structure to me. So we'll see how that kind of plays out. But essentially, it looks like we would move down. And if we go down deeper than this recent high, etc., then obviously we can analyze what that might look like. Now, of course, you can argue that with these two structures here, you could have a 5-3-5-3-5 in a wave 1, and then go up in 3, then a 5-3-5-3-5 in a wave 3, and then a 5-3-5-3-5 and so forth, right? It kind of just nests inside each other over and over and over again. So considering what on the hourly chart, start scaling that out into the larger timeframes and you'll start to see the bigger picture. So from an Elliott wave theory point of view, it looks like there's a potential move slightly higher and then basically looking for a drop, then a move up and then another drop and so forth, right? So that's kind of where Elliott wave theory currently sits when it comes to Bitcoin at the moment. Now, if I jump over into the smart money concepts before we talk about the macro stuff, here we can obviously argue the very similar kind of story, right? And we can see a change of character and a break of structure up here, right? We can see that we were moving up. We had the break of structures here. We had a change of character at this end, which is a bullish change of structure right in here. Okay, we can see that. And then we started to get these minor break of structures and minor change of characters within this current structure here. Okay, so looking at this, it looks like we have to come up to these fair value gaps at some point, and then obviously come back down into these lower areas. Now, that 5th wave expectation would basically take care of this area here. So from an Elliott wave theory point of view, we're basically saying we're going to revisit this area here, which is this imbalance in the order books, and also the equilibrium area at the moment, which is currently support. And then, of course, once we complete all of these, we're more than likely going to be moving up into these imbalances and these break of structures, or these fair value gaps up here, just up this break of structure. And then we'll potentially look to come back down in that other 5-wave structure and take out this particular fair value gap, right? This imbalance in the order books as well. So looking at this, it looks like we've kind of, aligned ourselves quite nicely to an idea of at least a corrective ABC structure, right? And it would look like this. Overall, basically take this one out, take this one out. This one might not get hit on the higher range. This one being about $24,500 towards the $24,800, right? So there's a chance that that doesn't play out, not right away. We might have to move up afterwards, okay? Because there is, of course, that bullish idea that this 5-wave structure upwards could be the start of a structure, right? If we want to be bullish about it, then we started with 5, we come down in a 3-wave structure, A, B, and C, right? The zigzag, and then we go up in another 5-wave structure, right? And it's a bigger zigzag pattern, right? So although we look like we're coming down in a trend-based structure, we're going down in 5 waves or whatever, zoom out a little bit and you can see that we started with 5 waves over here, for example. We come down in what could be 3 waves and then go up in another 5, right? And that there itself is corrective. So we want to be aware that there's a lot of different ways that this can play out. But for the most part, it does look like we have to come down at least on the short term. Now, as we take a look at our weekly, we do have that def cross, okay? We can see the def cross right in here. We can also see that this is the area of previous resistance. This is 24,000 to 25,000, and it's no coincidence that we also have this high getting hit up here and basically getting smacked all the way back down from it. This is obviously an area of supply. We talk about supply and demand areas all the time as a concept, smart money concepts point of view. We did take a look at this. You can see it also in here in terms of this premium area and this discounted area, all that kind of stuff, right? So when we take a look at here, we can see that this is an obvious area that we're likely to get rejected on. Not only is it colliding with our moving average of 200 and of course our 50 moving average, which obviously had a def cross on it. If I go ahead and remove those two and throw on our EMAs, you can also see that right now our weekly EMA is down here, which is our resistances. We've wicked up above it, but chances are we can close the weekly below this level. That'll be interesting. And of course, we have our 50 EMA up here as well, also acting as resistances. Take a look at those two things side by side, and you can kind of get an idea. So even though we have a death cross looking here, we also are finding resistances on the EMAs as well as the moving averages and all of that wonderful stuff as well. In terms of the accumulation pattern, well, that's kind of done and dusted now. It's just fantastic. I can put this one to bed. And by simply moving above this area of 25 to 11, it does mean that we're not following either of these schematics. And well, it's good to kind of say that it's finally done and dusted, and I don't like the accumulation pattern or Wyckoff in general. So it's good to kind of see that that is done. That's the only way I could have seen this being played out was down here with a selling climax, an automatic rally, a secondary test, the resistances, the secondary test in phase B, and then this one up here just pushing above the automatic rally, but it should never have pushed above the resistances, which it currently did by about $1 or so. So essentially it looks like it's all done and dusted, and we'll see how that kind of goes. The only other way you can draw this is potentially down here is the selling climax, and all of this is just the automatic rally, meaning that we've still got potential to go up higher before we actually go down and a secondary test of phase B, but I'm not really going to go into that. I think that's kind of, void at this point. So all in all, it does look like we have some really interesting stuff going on chain with a lot of the Bitcoin holders looking to move to the exchanges for whatever reason. The SEC going after exchanges is incredibly worrying. So do with that as you will. We can see that Elliott Wave theory looks like it's moving down. Smart money concepts looks like it also wants to kind of move down, at least on the smaller time frames. So a potential move upwards on the slightly larger time frames, but the macros remain the same. Essentially, a correction is due on the weekly time frame, and we can't get too carried away until that kind of plays out. And as I said many times before, until big participants, the billionaires and the multimillionaires, are looking to acquire Bitcoin and the retail investors are looking to sell their Bitcoin, I'm not expecting terribly too much from this space. But we shall see how it kind of plays out. For now, that's everything I have. If you found it useful and informative, smash the like button. I do appreciate that. If you're new to the channel, subscribe, and don't forget, guys, join us down in Discord. Until the next one, have a fantastic day.